Thank you to everyone that has joined in. I'm happy to be here. I hope you are happy to be here. We'll be living here with a lot of very, very good information. And we are going to have a good time. So we have about 123 people. I think we have more than 200 people that registered, but we will try and make this session recorded so you can also check back on it whenever you need the information again. What we are going to share here is very, very vital. A lot of things that I believe we don't get taught in schools, we don't get taught in university, which is a key part of personal finance. And that is what we will be treating today. Thank you once again. I'm so happy to be here. Could we see, if you are able to type, if you could just let me know where you are joining from so that it is easy for me in terms of arranging the information that is in my head. So if you could just put in the chat box, please, just let me know where you are joining from, be it London, UK, Nigeria. Okay, a lot of UK people. That's amazing. Abuja, a lot of, Abuja. St. Albans, UK, right, UK. Okay, Nigeria, Delta States, London, UK, Ireland, Scotland, okay. Norway, amazing. Leicester, okay. We've got a good number of people from the UK, Nigeria as well, Liverpool, Cardiff in Wales, amazing. UK in Kent, Essex. There are quite a lot of people in London that have joined. In London area. Preston, amazing. United Kingdom, amazing. Netherlands, that's beautiful. Luton, amazing. Nigeria, that's our home. Yes, Reading, UK, Bradford, Liverpool, Johannesburg, South Africa, Rotherham, UK, Northern Ireland. Wow. Lusaka in Zambia, amazing. Bristol, Dudley. Wow, that's beautiful. Thank you to everyone that has joined in tonight. Belfast, that's in Northern Ireland. Plymouth. Can I request the permission to record this session on your device? Well, we are putting it live anyways. We are putting it live on all platforms. So, I mean, we are putting it live on Zoom. I'll try and see if I could put it on TikTok now as well, but they won't be able to see the screen. So you could record the session and I'll put the recording on YouTube as well. So just to notify, like if you need to catch up on the sessions, the recording will be on YouTube and then you will be able to track it. So thank you to everyone for joining in. Just 1 second and we will make a start. Okay, thank you so much to everyone that has joined in. I am seeing some requests to record it on their computer. I would advise it would be better if you just wait for me to upload this on YouTube and then you can take it from YouTube anytime you want. I think that would be better. Okay. So I will go straight to the point. I'll share my screen straight away, and then we can start. The session. I think we have given our people enough time to join in. this is already 12 minutes past 7. So we can respect all the people that came in early. So let me share my screen straight away, and then you can see exactly where we are going. Okay. How do I share? Yes, you can just get it from YouTube. You can just get it from YouTube. Okay, I hope you can all see my screen. Please let me know if you can see my screen. Let me see. All right, amazing. I'm glad you can all see my screen. So let me make a start and bring it from the beginning. Right, okay. Can you still see it very clearly? Yes, that's where we want to be. Amazing. So what prompted this session was a tweet I made yesterday. Was it yesterday or the day before? So I made this tweet about the gains that are in investing in a child stocks and shares ISA. And I think I shared 3 accounts, and those accounts has been growing over time. And it is one of the things that I found out that actually staggered me several years ago. It actually turned my head because I didn't understand that you could be investing in assets, just investing little by little, consistently every month, which the finance people called dollar cost averaging. I couldn't believe that kind of return is possible. So I went into research several years ago. And a lot of people that know me here know I share my story a lot. I grew up in Mushin, Lagos, Nigeria. Life was very, very tough. Money was never available. So the moment I started earning, it was very, very important for me to start learning about money, to start knowing how money works, to start knowing what to do about money. So I read several books, Think and Grow Rich, what's the name? Rich Dad, Poor Dad, The Intelligent Investor. Like I stock books a lot, and I'm sure you would have seen with with my background and all, there's still a lot of books right there in front of me. Like I just wanted to find out knowledge. I wanted to seek to understand what exactly is going on here. And then I showed people how this thing works. And then they did the same thing and they were getting the same result. And that just blew my mind. And I couldn't keep it to myself. That is why we are doing this session. I cannot keep this kind of information to myself. And whatever I share with you tonight, I don't want you to take it hook, line, and sinker. I want you to do some more research about it as well. Because when you do research and when you understand something, then it is easy for you. You don't need to tell me now to invest. You don't need to tell me to put some money away as investment. I will always do it because I understand the yield. I understand the growth. I understand what can happen to my money. So tonight, I'm going to open up as much as possible. We will leave enough room for questions so you can ask questions for yourself or for your children as well. And then you can take that information away and act on it. But what I will beg you is that knowledge is not power. Knowledge is potential power. Action is where the real power is. You get me? Action, implementation is where the real power is. I told a friend of mine, I think about 3 years ago, to start doing this stocks and shares ISA thing. And he didn't do it. So I shared some accounts with him recently. And he was like, why did you not force me to start doing this? I said, well, how can I force you? I can only show you. I can't force you. He was like, Baba, you should have forced me to start. I said, I can't force you to start. We are having this session now. They say the best time to plant a tree is 20 years ago. The second best time is now. So whatever we do tonight, please do not sit down on this information. Start working on it immediately. Even if it is the learning part, for you to do more research, for you to speak to financial advisor, start doing that. And then this time next year, we are not going to be talking about the same thing. We'll be talking about, I have started investing, this is my return. That is what we want to be talking about. So that is what prompted this Zoom session. So I'll just do a small illustration for you so you can see that account and you can understand exactly what it means. Because some people looked at it online and they were like, what does this mean? What does this mean? We don't understand what it means. And it is okay not to understand. It is okay. That means you don't have the knowledge yet. But now I'm going to show you exactly what it means so that when you open an account of yourself or when you are able to explain it to someone as well, you'll be able to say, this is what is going on here. This is what is going on here. This is what's going on here. So thank you to everyone that has just joined in. I'm just live on TikTok on my other phone here. If you're on TikTok, we are live on Zoom. If you check the handle, you'll see the Zoom session. You can also join us as well. And if you can't join us, the recording will be available on YouTube. And you will be able to see it. So I want to show you exactly what is going on here. And that you can see that tab that is clicked is the performance tab, right? That is the performance tab. That shows you exactly what is happening in that account, that has been happening over time in that account. So you can see that they started investing in that account March 2020. You can see that is 15th of March 2020. And today's date is 12th of December 2024. You can see that 12th of December 2024. So I think I need to go back. 1 second. Right, 15th of March 2020 and 12th of December 2024. So what you see here is that you started with zero. That means they started investing in that account with zero. There was nothing in that account when they started in 15th of March 2020. And you contributed how much? £2,840. That means that account in total, they've contributed £2,840. That could be, let's say that person is investing £100 a month, or that person is investing £50 a month. But if we look at it, let's say on average, from 2020 to 2021 to 2022, let's say 2021, 2022, 2023, 2024, that is like, that is 4 years already. That is 48 months, right? So if you say from March up until December, let's say that's another, how many months is that? Let's say another 10 months, that is 48 plus 10, that's 58. So if you take your calculator and just check, say, let me do a quick calculation and say 284 pounds divided by 58. That means averagely that family is putting in, say, £50 a month. That's what they've been doing for the past 4 years plus. And they've been able to put into that account £2,840. And that investment has returned £1,249. So the total they have in the account is £4,000. I don't know any bank that can give you this kind of return. Definitely that's not possible, So, but for you to get this return, there is also some risk involved. And that's what we are going to talk. We're going to talk about everything. Okay, we are going to talk about everything. So they've been able to put 2,840 in the account, and that 2,840 has gone to make 1,200. We were trained to use our time to get money. You give your employer your time, and your employer pays you money. But the rich have mastered something. They use money to get money. And how do they use money to get money? They use money to buy assets, different kind of assets. Let's say they buy stocks, they buy bonds, they buy real estate, all those kind of things. So the rich have understood how to use money to make money. So they don't just work for money. They also make money to work for money. In this case, putting 50 pounds away has been able to make that £2,840 to go and work and earn £1,200. So the money that we could use to order takeaway every weekend, the money that we could use to do Owambe every weekend, we can actually be putting away, and that money will be growing exponentially. The reason why I am so particular about the children is because a lot of us know how long it took us to get to where we are right now. And we know the disadvantage that we suffered because we did not have any small cash injection behind us. Our children are also going to go into this world to try and make a life for themselves. And if we can just give them that support, to say, okay, this child has turned 18, that's your stocks and shares ISA, it's got so thousand in there for you to start life, with a small amount of money that we could just be using to, the amount we just spend maybe on Uber or something, or using it to buy Starbucks, we can actually put this money together and invest it for them. That is why I was really, really particular about young children. So we'll go through and understand exactly what is going on. Okay, that is account number 2. And as I said before, this is another account that started in July 2021. You can see the account started in July 2021. And today is 12th of December 2024. The account contributed £1,610. If you split that, let's say 2002, 2022, 2023, 2024, that's about 36 months. 36 months, add from another 7 months to 36, and you'll be talking about, even if you just use 36, say 1,610 divided by 36, that's just about £44 that they've been putting away, less than £44 if you put the rest of the months to it. And they've been putting that away every month, and that £1,610 has gone to return £582. So that is how the investment will be growing. And you could see that short graph there that just shows that they get that money, it increases, they get it. It's the investing. You can see the dip there that happens in the market. It goes down, it goes up, it goes down, it goes up. But if you leave it for a long time, the stock market, you draw that line and you see the way it is going up. That is the beauty of investing in the stock market. So I know you want to know how to do this for yourself. I know you are excited and you are ready to go. And this is what we are doing this session. We will open, break away all the barriers so you can understand what is going on. Okay. I'm just quickly admitting some people that are in there. So who is excited and ready to go? I'm looking. If you can put comments in the section, let's see who is excited and ready to go. Yes, Miss Gloria said she's ready. Oh, Miriam Badmos, I think that is my brother's wife, or Mrs. Badmos, Abdul Hakim's wife. Okay, somebody is asking a very important question. What is the name of this account? This account is with Vanguard. This is Vanguard Junior ISA. So I will explain what Junior ISA is. I will explain everything. We will get to that section and I will explain. So I think we are ready to go. Some people are still joining in. I don't judge, but time. Let's admit them. Let's get them in. And then, yes, this is Vanguard Junior ISA. Thank you so much, Miss Gloria. So we will make a start. Let's get going. A bit of a disclaimer. I have to do this because I am not a licensed financial advisor. So this information shared on this platform is general information and educational purposes. Does not constitute financial, investment, or legal advice. Always do your own research. Like I said, always do your own research. So I have to give you that disclaimer. And investing carries risk. I will explain all the risks to you. And I advise you to do more research. This is a result of my years of finding, but I'll advise you to do research. Okay, let us get going. Aha, if you are in London tomorrow, we are at this party tomorrow, Lemfi's party. I work for Lemfi. I'm their growth manager in the UK, and we are partying tomorrow. If you are in London and you are able to come in, come down to Ilford. It's free entry as long as you can show your app. There will be lots of merriment. I'll be there as well. If you have some questions, you want to pull me aside, I'll answer you. So We are there tomorrow from 6:30 till God knows how long. We'll be there tomorrow. So join us tomorrow. Let's have a good time. Lemfa is amazing. They look after me, and they look after a lot of Africans as we try to, do all those amazing things back home. Okay, let's make a start. What is ISA? Right. So if you put what is ISA on Google, it is called individual savings account. Okay. And one definition that I saw that interests me a lot, it says that it allows you to save and invest. There's an and there, not and. Save and invest in a tax efficient way. Why is it a tax efficient way? If you invest, let's say, for example, if you buy an asset, what is an asset? People say the simple definition of an asset is something that puts money in your pocket, something that makes money for you, and a liability is something that takes money away from your pocket. In fact, the almighty accounting equation is asset minus liability is equal to equity. That is the almighty accounting equation. So I believe that should actually be the almighty formula. When I think about it very, very well, I think when I said that minus b plus or minus square root of, that shouldn't be the almighty formula. The original almighty formula should be asset minus liability is equal to equity, because that one is the most important. That one is the most important. So whenever you buy an asset and you make money from that asset, normally the government is meant to tax you. That is what they call capital gains tax. The government is meant to take some money. They will give you some allowance, but after that allowance, the government is supposed to tax any gains that you get whenever you sell that asset. That is what they call capital gains tax. In this abroad, only two things are sure: debt and tax. They've written that since 1776. Debt and tax are the two things that are very, very sure in the West. So what the government has now done is that they give you an avenue in this ISA account. You can open an ISA account, and whatever gain you make on any investment you make through an ISA account, they will not tax it. Okay? So they will not tax any investment you make through an ISA account. That is why ISA is very important. So as I said there, it allows you to save and invest money in a tax efficient way, meaning that any gains you make when you invest in an ISA is tax-free. Okay? It is tax-free. So for an adult, you are allowed to invest up to £20,000 a year. You are allowed to invest up to £20,000 a year in an ISA for an adult. But for young children, you are allowed to invest up to £9,000 a year. And any return you make on that £9,000 will not be taxed. Okay. Because the title of the seminar is for children, so we will be specifically focused on the children. But if an adult wants to ask questions about themselves, you can ask at the end of the session. The reason why the children's one is important is that once you are investing for them, it is locked in, and you'll be able to get it back when they are in their teens. It is there. So whatever money you are investing with them, it is locked in. It will continue to grow. And that is why I like it. Because if it is an adult can say, this is my Facebook shares. It has gone up. Let me go and sell it. But with children, it is very, very different. You will have to leave the money there, and the money will be invested there. And that gives me joy, because it will give that money a good amount of time to work and multiply, And that is very, very important. So for adults, you are allowed 20,000. For children, you are allowed £9,000 a year. So what are the types of ISAs that are available out there? I'm just admitting some people. So if you see me pause a little bit, I'm just trying to admit people into the group. So what are the types of ISAs that are available? So different company offers ISAs. Different service provider offer ISA. The one I was showing you earlier was Vanguard's ISA. Fidelity will offer ISA as well. HSBC will offer ISA as well. Or a majority of all these service providers offers ISA. So one thing you have to now be very, very careful of when you are opening ISAs is the fees that they charge you. So you can go and compare them. You can go to compare the market. You can go to which. You can go and compare all of them. What you don't want is for a company to not do much and they should be taking a lot from your investment return. Fees are very, very important for you to look out for, because if you are not careful, if you go and open with a company that just takes a lot of fees, before you know it, majority of your return, it will just be going into the pocket of the bankers. This is why you have to stay with companies that the service is good and the fees are very, very small, because fees are, they are very, very critical. Imagine if a company is charging you 1% every year, and see what will happen to your return after 20 years. And they are taking 1%, 1%, 1%. If you do that calculation, it is a lot of money. So you want the fees to be as low as possible, and your return is doing very well, and then there's not a lot that is going away in fees. That is very, very critical. I'm just trying to admit as much people as coming in. So we have cash ISAs, we have stock and shares ISAs, we have innovative finance ISAs, we have lifetime ISAs. So I'll talk on 3 of them, but the particular one that we are talking about tonight will be stocks and shares ISA. So a cash ISA is like this. It's just like you go to, you open an account and they promise you 2% a year. Let's say if you put £100, 2% a year, you will get £2 at the end of the year. That is what they've guaranteed you. That is what a cash ISA is. That is the interest they will pay you. With a lifetime ISA is for people that are looking to get into property, or they are looking to save for their pension. That is what we call lifetime ISA. So if you are looking to get into your first property and you are also looking to save for pension, those are the 2 major things that people use lifetime ISA for. But for you to open a lifetime ISA, you must be between the age of 18 and 40. You must be between the age of 18 and 40 to open a lifetime ISA. So check that out if you are looking to buy your first property, because the government helps you put some money in. I believe it is 25%. So if you max your lifetime ISA to 4,000, the government will help you put 25% on top. But you can only use it to buy your first property or for later on pension. That is lifetime ISA. The one that we are particular about tonight is called the stocks and shares ISA. What is stocks and shares ISA? A stocks and shares ISA is an ISA that you can open with all of these companies that I've mentioned before. Vanguard, Fidelity, Nutmeg, all of them, they've all got stocks and shares ISA. But I've told you to be careful of the fees. So what a stocks and shares ISA is that you can open a stocks and shares ISA and you can buy shares in a stocks and shares ISA. You can buy Apple, you can buy Microsoft, you can buy Nvidia, you can buy Vanguard S&P 500. You can buy all of these assets in a stocks and shares ISA. That is the difference. In a cash ISA, you are only dealing with cash majorly. But in a stocks and shares ISA, you are investing in shares. And we know that shares is an asset class on its own. Just as we've talked about different asset class, we've talked about real estate as an asset class, we've talked about bonds as an asset class. Gold is an asset to some people as well. You know, crypto is an asset, but it is very, very volatile. If you don't know what you are doing, don't even go there, you know. But you want an asset that is reasonable, that is stable, and stocks has proven to do that for so many people for several years. This is why it is, you know, before they list a company on the New York Stock Exchange, for example, before you go to a New York Stock Exchange, you go through a lot of negotiations. You go, you know, like, and these are the companies that we use every day. I'm using a laptop now, HP. HP, I can own a piece of HP by buying their shares in my stocks and shares ISA. In fact, there was a time I bought 8 HP shares, and a few months after that time, I think Warren Buffett also bought some HP shares, and the shares just went up. The day Manchester United bought back Ronaldo, their shares went up like 10% that particular day. And that is how the stock market reacts to news. So as a long-term investor, you are not bothered about the news. You just want to invest for the long term. So there are a lot of things that we need to wrap around there, but those are the key things you need to know. Cash ISA, stocks and shares ISA, lifetime ISA. Innovative Finance ISA is a little bit complicated. I mean, I don't see regular people doing it, but if you are interested in it, drill down and get some understanding of how it works. Okay, as I was saying before, we all trade our time for money. The wealthiest people in the world, they trade money for money. They buy assets that increase in value over time and generate cash over time. Type of assets, as I mentioned before, property, land, gold, stocks, cash. Cash is your most liquid asset, but the biggest problem with cash is inflation, the general increase in the price of goods and services. So money loses value as the price of things rise. So you have to really put your money to work so that your money can work faster than the rate of inflation. You see what I'm saying? So if you buy something 10,000 today and something you are buying 10,000 is now 12,000, that means your money has lost value. But how can you put that money to work to make sure that money's rate of return can actually give you much more than what the price of things are? That is why it is very, very important to put money to work. We have seen a lot of things happening with our parents lately. They are collecting their pension and it is not worth much. So those are the things that we also have to consider, particularly investing for our retirement. You know, we are talking about children today. As adults, we need to also start thinking, what is our pension plan? How much do we want to have in our pension fund by the time we retire? Where do we want to retire? There was a book that I got sometime. That book is not here, How to Retire by Kristen Benz. A very, very nice book that you can also get and read. With me, there is no secret. I'll tell you everything that is behind everything that I'm reading. I'll share with you. So as I was saying before, cash is the most liquid asset. The biggest problem with cash is inflation, which is the general rise in goods and services, which makes cash really unsafe. But it is good to keep cash, a bit of cash. The reason why it is good to keep a bit of cash is that when the market comes down, when the price of assets come down, it is people that have cash that are able to take advantage. You see what I mean? So that is why it's always good to keep some cash so that when the price of assets fall, you know, you will be able to take advantage of those kind of situations. So 2 ways to make money from an asset: capital gains or appreciation like we have in property, and then dividends or rental income. Let's say you buy a house now and then you rent it out. You make rental income from it. And then also dividends, like that person living in that house. So that house will increase in value over time. That is number one. And then the person living in that house will also pay you rent every month. And that works in the same way as you buy some shares. Let's say you buy Apple shares, for example. Apple price will increase over time because a lot of people want to buy Apple shares. So the price will increase over time, and then Apple will still pay you dividend, which is a bit of the profit that they make every year. Okay, I'm trying to get through the slides as quickly as possible to give room to questions. Right. The beauty of equities, what we call equities, is the same thing as stocks and shares. The beauty of equity and compounding. Albert Einstein said, compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. A lot of us do not really understand how compounding works. And I'll show you some illustration now so that you can get a feel for what can happen if you are able to buy assets and consistently do it over a long time. Warren Buffett said Warren Buffett is the wealthiest or the most successful investor of modern era. He said the stock market is a device to transfer money from the impatient to the patient. You see, the stock market is a device to transfer money from the patient to the patient. I'll now give you some illustrations of how compounding works, and then you have an idea of what to expect when you start investing. So first of all, I'll talk about a particular asset called the S&P 500. You know, a lot of people talk about it, the S&P 500. What is the S&P 500? So the S&P 500 is literally, let's say, the top 500 companies in the US. Okay? That is just what it is, the top 500 companies in the US. It's like you talking about the English Premier League. You know, the English Premier League, you have 20 teams in the English Premier League. So now the top 500 companies in the US are what are in the S&P 500. Who are in the English Premier League? Man United, Chelsea, Arsenal, West Ham, Aston Villa. Who are the people in S&P 500? Apple, Microsoft, Google, Meta. Meta owns Facebook, WhatsApp, and Instagram. You know, those are the companies that you will find in S&P 500. So they have already sorted the list for you. Some companies will enter the S&P 500 based on some criteria, and some companies will drop out of it. So Vanguard has compiled that list, you know, that S&P 500 list. And anytime you buy a piece of the S&P 500, you are buying a piece of all of those companies. You see what I mean? That is exactly what the S&P 500 is. You don't need to do anything. You just need to be buying the S&P 500 and you have a piece of all of those companies. So I'll show you exactly what is happening there. And then we'll now go into the compounding formula. And then you see exactly how compounding works. Okay, that's the compounding illustration. I'll stop sharing my screen now. I'll share you another screen, and then you'll be able to see exactly how it works. I hope you are having a good time, and I hope the explanation, you are getting it as I am doing those explanations. Please, let me see your comments as I'm trying to check. So somebody is asking for halal. When you wait till the question time, we will talk about the halal options. Is there a lifetime limit, or 9K per annum is the only limit? If it is a child, 9K per year is what the government has given you. If you open another account and invest through another account, it just means that you will pay capital gains tax in another account. Okay, that is just what it is. Okay, let me do the illustration for you so you can have a look. Right. Just trying to share my screen so you can see exactly what is going on. Share. Okay. Right. Can you see my screen again? Just want to make sure you are not missing out on anything. Please let me know. Can you see my screen? Right. Amazing. Amazing. I'm happy you can see it. I just entered due to my work schedule. The recording will be available on YouTube. I'll make sure the recording is posted on YouTube for you so you can catch up on it. Right. Okay. So if I say S&P, so that is S&P 500 that I'm saying. So if I say S&P 500 companies, S&P 500 companies list, okay? So this will show you the companies that are in S&P 500. Right. Can you see the companies that are in there? You can see save and exit. So which companies can you see in the S&P 500? You can see the S&P 500. You can see the companies that are there. Apple is there. NVIDIA is there. Microsoft is there. Amazon is there. Meta is there. Tesla is there. Alphabet, that is Google. You can see Berkshire Hathaway is there. JP Morgan is there. Visa is there. Costco is there. Walmart is there. Netflix is there. Salesforce is there. Oracle is there. Adobe is there. Coca-Cola is there. So those are all the companies. Goldman Sachs is there. If you invest in the S&P 500, there's no need for you to be going and be picking stocks because you don't have the education. You don't have the skills to be actually be able. Oh, the people on TikTok, this meeting was happening on Zoom. If you check my timeline, you will see that I have posted the meeting invite about 2 hours ago. If you are still able to join on Zoom, fine. If you are not able to join on Zoom, the recording will be available on YouTube. I'll make sure the recording is there. So my apologies. So you can see all of these amazing companies, they are already in the S&P 500 already. So you don't need to do any wahala. Once you invest in the S&P 500, you have already invested in the world's best companies. Imagine Tesla is there as well. If I do Control F and I say I'm looking for Tesla, you see, Tesla is there already. Meta is there, Amazon is there. These are the biggest companies in the world, and they are already packed in the S&P 500. So if I now go back and I now say S&P 500 returns for the last 100 years, what has S&P 5, like what has been the return on investment for the S&P 500 for the last 100 years? That's searching. You can see. So S&P 500 average yearly return over the last 100 years has been 10.68%. That means S&P 500 averagely has been delivering 10.68% over the last 100 years. So that means that in some years, it can do plus 20. In some years, it can do minus 10. In some years, it can do minus 5. In some years, it can do plus 30. This year has been particularly good. With the American elections, with all the things that have happened, we have ended the year on a very good positive. It can be next year, it can slow down a bit. But the good thing is that people that are very patient, that is why when you want to start investing, they will tell you the first thing you need to do is to pay your high interest debt. You want to make sure you are not carrying any debt. Pay your debt down, okay? And then number 2, have emergency fund, which is 2 to 6 months of your monthly expenses. They want you to make sure you have emergency fund. Then you can start investing in shares bit by bit, and hold it for as long as possible. Okay? Hold it for as long as possible. Now, let me now show you what can happen to you if you are very patient with your investment. Let's go to compound interest calculator. We've already gotten the 10% from the S&P 500. We know that S&P is giving us 10% averagely every year. Now, let's see what can happen if we are patient for 10 years or if we are patient for 20 years. I'll show you this on the compound interest calculator. Continue with recommended cookies. Okay. So I'll go to pounds, right? So there is simple interest, there is compound interest. Compound interest will help you to understand this is exactly what we are doing. So initial investment is what? 0. You started with 0, right? And the interest rate is what? 10%. 10%. That's what we said the S&P is giving us, 10% per annum. And the compounding frequency is annually, because the return, because there are a lot of Muslims in the session as well. Return, interest that we are talking about here is return, is rate of return. It doesn't necessarily mean riba, it's rate of return. So your rate of return is 10%, the frequency is 1 year, okay? It's 1 year. And then let's say, like for a child now, let's say you just had your child and you want that child to get the junior ISA when they are 18, right? When they are 18, that's when you want them to get the junior ISA. And how much are you putting in the ISA? Let's say you are putting £100 every month, just for example, £100 every month. How much is that per year? That's £1,200 per year. So let's say you are putting in £1,200 per year. At the end of the year, you are putting that £1,200. You now want to see if you are getting just a 10% rate of return, your compounding is annually, and we are putting 18 years, so that you want to say, my child, this is what I want to give you when you are 18. Now let's calculate and see how much you'll be giving to your child, just to give you an estimate. Okay, so if you are investing just £1,200 every month, every year, £1,200 every year, at the end of 18 years, you'll be handing a portfolio worth £54,000 to your child. That is what you'll be giving them. And you can see the calculation here. The calculation is very simple. Year 0, the deposit is 0, you didn't earn anything. You can see year 1, you put in 1,200, your total deposit is 1,200. That's after year 1. You didn't get anything because you put it at the end of year 1. If I put it at the beginning, that year 1 will also earn something. Okay? So in year 2, that year one's 1,200 will earn 120 pounds. That is 10%. You see what we are talking about? 10%. And then you now add another 1,200, making 2,400, plus that 120 that 1,200 earn. So the total that you are starting year three with is 2,520. Okay? Then you now add another 1,200. And you can see that 2,520 is going to earn 252 pounds. And then you now add another 1,200 to that, making your deposit 3,600. And then you can see what that is going to earn. And that is how it will be earning it up until the end of the 18th year. And you'll be giving your child a portfolio of 54,000 pounds. Let's say you, for example, you have just started working at the age of 20. Let's say you started working at the age of 20 and you're looking to retire at the age of 60, but you make it, you are very, very disciplined enough to make sure that you are putting away 200 pounds invested every month just for yourself. Let's see what can happen. So let's say 40 years and you're doing 200 pounds a month. At the end of the year, 200 pounds a month is going to give you 2,400 pounds, right? You're doing 2,400 pounds, 200 pounds. Let's say that's reasonable and you are consistent about it for 40 years. Okay, you started with 0, interest rate 10, compound frequency annually, 40 years, you're doing 2,400 yearly. Do the calculation. So if you are consistent for 40 years of just putting 200 pounds away every month, you'll be sitting, by the time you are 60, you'll be sitting on a nest egg of over 1 million pounds. And look at how much you yourself put in. How much you yourself put in is only 96 pounds, 96,000 pounds. But your 96,000 pounds has gone to make 966,000 pounds. Why? Because time in the market is much more important than trying to time the market. The stock market rewards people that are very patient in the market. You can see the importance of compounding, what we don't understand about compounding. When I posted that thing that I posted online, somebody put a comment there. He said, it is not possible. It is not possible. But they forget that that account started 2020, 40 years ago. And that account has been putting their 50 pounds regularly every month. Every month. When it goes up, they are there. When it goes down, they are there. When it goes up, they are there. When it goes down, they are there. They forget that. Our brain is wired for something very quick. So if you can retrain your brain to be patient and consistent, you will yield a lot of benefit. I also have, can you still see my screen though? So that I'm very sure. Let me see. I just want to be sure you are still seeing my screen, so that the screen has not disappeared. Okay. Yes, 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 yes. Okay. Now, let me give you an example of this. Have a look at this. Have a look at this. This is Apple, right? Okay, look at Apple now. Apple is trading presently at $248 per share. That is what Apple is trading on today's date, 12th of December. If anybody that has been following me on internet, they've been knowing since the past few years that I've been talking about buy Apple shares, own Apple shares. You have Apple, you are not buying Apple. You have Apple, you are not buying Apple. See, Apple is presently trading at $248 per share. If you bought it, look at this now. If you bought it in August 2024, this August 2024, you'll be buying it at $198. If you bought it in May 2024, you'll probably be buying it at $187. But today it's trading at $248. If I move that map in and I just bring it further back and I make it a 3-month chart, Okay. Those that bought it in 2022, they bought Apple shares for $131. You can see that is the candle there, $131. That is just 2 years ago. But look at what it's trading at today, $248. And tell me, who doesn't have Apple phone? So many people have Apple phone. Even if you don't look at Apple, if you go and look at another one, say you go and look at Microsoft. Microsoft, look at Microsoft. Microsoft today is trading at $452. Okay, Microsoft is trading at $452. If you look at it over time, you see how the map is going. You see that if you touch the top of the candle, you see that it is always rising. When it comes to this level, when it was trading at $200, some people will say, hey, Microsoft, yo, let me go and sell these shares. But the people that are patient, that waited from 2022, they are the one milking it now when it is $451. So even if you check the S&P 500, let's come out. Let's check the S&P. You see the S&P 500 itself. That is VUAG. That's the Vanguard S&P 500 itself. Can you see the S&P 500 chart itself? You can see how it is rising over time. You see for yourself now. 5 years. You can see that. Can you see how it is rising over time? Sometimes it comes down, sometimes it goes up, sometimes it comes down, sometimes it goes up. But the person that has been consistent, if you bought it in October 2020, you'll be buying it at $45. But what is it selling at now? It is selling at $90. You've already doubled your money. Why? Because you are patient. Why? Because you invest consistently. So that is the illustration I want to show you. All what I'm saying is available on the internet. You can go and check it. I have just put this information together for you so as to help you to make informed decision. So we'll go back to the slides now. I think there are a couple of more left, and then I'll open the floor for questions. I think the way that we used to argue in primary school, I think I've been able to convince you and not to confuse you that you should start investing for your children. Okay, we'll go back to screen. Yes, we are there. Slideshow. Play from current slide. So we've done the compounding illustration. I've also shown you some shares that has grown over time. Hopefully you are able to understand that. So if you are going to open a junior ISA with Vanguard, I've just done some illustration here. So this is literally your first page that you're going to get into. So what Vanguard does is that Vanguard will ask you if you want to do 500 at once or if you want to do £100 regularly. I always say a lot of people can't afford 500 at once. So do the 100 regularly. But the people that have signed up, what they normally do is that once they start with 100 regularly, they do it for 2 months. And then they go into the settings and reduce that direct debit to, let's say, like £50, which is what they can afford. You see what I mean? So that you are not, if you cannot afford 100 going forward, you are able to reduce it to 50, and you just set the asset. It just buys it for you regularly. You don't need to do anything, just to check it every month. And I believe all other platforms are like that as well. So you see this page, when you want to open it, it's going to ask you, when was your child born? You put the date of your child. I can confirm I have the parental responsibility for this child, and the child is a UK resident. You put all of that in, and then you put, I think it will ask you for your national insurance and bit by bit. I just try to screenshot the most important part. So it will ask you for you to choose the investment, put your details, and complete order. So you can decide to make a single payment, like I said before, or you make regular payment to for each of the investment. Then this is where you make a decision about what kind of investment you want. So please, how would you like to invest in your junior ISA? You can choose their blended funds, you can choose their equity funds, but the Vanguard S&P 500 that we are talking about is in the equity funds. And if you go to the equity funds, you see they have several ones here. And it is this one that we're talking about, the VUAG. The VUAG. There is the accumulating and there's the distributing. The difference between the accumulating and the distributing is that the distributing will pay dividends to you. The accumulating will reinvest the dividend automatically. So you don't want it to pay the dividend and the dividend is sitting into your account in cash. You want, as the dividend is paid, it is reinvested straight away. I'll try and get the recording to YouTube ASAP. By the weekend, it should be on YouTube. By the weekend, I can assure you, it will be on YouTube by the weekend. I'm so sorry you are missing out on this, but I'll put the information out. Even because we do live sessions every day. People that know, we are always doing live sessions every day, 5:30 UK time. I am in the gym and I'm talking to my people. I'm taking questions and asking questions. If you want to join us tomorrow, you can join us. Live sessions, 5:30 every day. I'm always there. Apart from when I'm giving speeches outside the UK or somewhere in town, that's when I don't show up. But I'm always there 5:30 and I take questions. Scholarship, study abroad, business, growing personal brand. I take all questions that come across. So as I said, pick the VUAG, and that's the S&P 500 that we are talking about. And then you can now decide if you want to do single payment, if you want to do regular payment, and then they will sort the rest out. So a lot of people have gotten out to me and they say, we are an American call, what is the equivalent in America? In America, there is what they call the custodial Roth IRA, the custodial Roth IRA. Check out the custodial Roth IRA for your children. This UGMA, UTMA custodial accounts as well. You see these three, custodial Roth IRA, UGMA, UTMA, this 529 education savings plan. Try as much as possible and see someone like a fiduciary. They call them a fiduciary. That's like a financial advisor. See a fiduciary. You only need to see them maybe once or twice. Set out that plan for yourself. What are you doing with your 401k? Do you have a traditional IRA? Do you have a Roth IRA? It's like designing a financial plan for yourself. And then just follow that financial plan consistently, and then you are sorted. You are sorted. It is the discipline and the consistency that will help you achieve what you want. In Canada, I know there's the TFSA, but that TFSA is for adults, the tax-free savings account, I believe. That is for adults. But for children, you can also do research and see if there is an ISA equivalent for children. People ask me for the Nigerian equivalent. Nigeria does not have an ISA. And you can see that the tax reforms is just happening. So I don't know what is happening with tax in Nigeria. I know that some states are very good at it. Some states are not very good at it. I know these companies are operating in Nigeria, Invest Bamboo, Cheaper Cash, True Finance. You may just have to design your own yourself. You see what I mean? With Invest Bamboo, I know you can buy what they call fractional shares. Fractional shares means that the way the S&P 500 is $90 per share, you don't need to buy the whole $90. If you can only afford $10, just buy and hold. But a lot of people complain about the rate that Invest Bamboo does their dollars. And I say, well, there's not a lot you can do about that. But the good thing that you can be happy about is that at least you are able to buy an asset that is dollarized. 20 years ago, these things were not possible. But now you are able to access the global market. You are also a global investor. So that is a good thing. So you can use Invest Bamboo, check out Cheaper Cash, check out True Finance. All of these companies I mentioned, I have zero affiliation with them. It has just been my own personal research. I've been able to gather them together. I have zero affiliation with them. And yes, so that is the African equivalent. You can do one for your child, open an account and say, this one account that I've opened is for my child, and start, doing it regularly and consistently. Okay. What else? Okay, these are some good books to read. These are some good books to read. Psychology of Money by Morgan Housel. You can read, you can check the audio book. After checking the audio book, you can also, the audio book is on YouTube. There's a lot of places on YouTube that they have, there are a lot of places on YouTube that you can watch the audio book. I mean, you can listen to the audiobook. A Simple Pathway to Wealth by J.L. Collins is another good book that you can read. Dando Investor by Monish Pabrai is another good book. I've read all of this, and I can tell you, investing is the way. Long-term investing is the way. You will do amazingly well for your children if you can start working towards their long-term financial future right now. Learn to Earn by Peter Lynch and John Rothschild. That's another good book that you can get as well. Okay, I think that is about it. That is the end of the slide. I hope you have enjoyed everything that we have done here. I hope you have enjoyed everything that we have done, and I will open the room for questions. Questions. Okay, questions. Yes, the session is recorded. The session is recorded, yes, and it will be put on YouTube. Okay, questions. I'm trying to see if there are any questions there. Sir, what about we that we don't have kids at the moment? Can we open this account? Yes, you can open a stocks and shares ISA, 100%. You can open a stocks and shares ISA, and you can start investing for yourself. You don't need to have children to invest in a stocks and shares ISA. You can start investing in the stocks and shares ISA for yourself and investing in Vanguard S&P 500 just for yourself. Perfect. For those asking for my YouTube channel, that is my YouTube channel. Every content that I put there is long-term content, well-detailed content that you can listen and enjoy, take notes, and do amazing well. So check it out, subscribe. I'll be doing some podcasts. I'll be doing some more live sessions. I'll be doing some more recordings like this, and you'll be able to benefit from them. I wouldn't put it out if I have not done a lot of research on it. Okay, which one can a 45-year-old invest in? I mean, it is really down to you. As if I'm trying to take these questions as they come. Some people are raising their hands. Some people are just asking straight away. I would say, please, let us do this in an orderly fashion. I have just put the YouTube channel in the chat as well. So please check it, subscribe to it, and there will be a lot more resources. There will be a lot more sessions like this that we will be doing, and then you will be able to benefit from it. Okay. Let us talk about the halal investment version. There are a lot of our Muslim brothers and sisters that will only want to deal with halal. So what you can do is this. A lot of investment firms have not caught up with the halal principles yet, but some of them have. So what you want to do is to check out some companies, some service providers that will have the halal options. So if I go on Google now, for example, I'll tell you now, if I go on Google and I say halal S&P 500. So what they have done with the halal S&P 500 is that they have removed the companies that do not suit Islamic criteria. That's what they've done with the halal S&P 500. And then you'll be able to see, okay, we have something here that is the HSBC Islamic Global Equity. So that HSBC Islamic Global Equity, you go and look at the companies that are inside. You see that you are happy with the companies that are inside, and then you are going to be able to invest in it. So maybe you will have to open your stocks and shares ISA with the HSBC so that you are able to access that asset. That might be the option that you will have to take. I have also seen there is another one. There is another Sharia compliant S&P 500. So even on Trading 212, if you go to Trading 212, for example, which is another service provider, but Trading 212 does not have child ISA. Trading 212 has ISA for adults. So if you go to Trading 212 and just put Islamic, yes, if you put Islamic in Trading 212, you see a lot of assets that are halal assets. So what you just need to do is to check them. You know, I can see the Dow Jones Islamic Global Development Market accumulation. What you just need to do is to check the companies that are there. And if you can see that they are equivalent to what you can see in the S&P 500, then that is the one for you. They've streamlined it to make sure that they remove the companies that are not halal compliant, and they've only left the companies that are halal compliant. So that is exactly what you want to do. So you already saw the way I search for the companies in the S&P 500. You want to check the companies that are in that halal funds as well. As long as majority of them are equivalent, that means they've already sorted that one for you. Like all the halal funds that I've seen, Apple is still there, Microsoft is still there, Nvidia is still there. So just check it out, and then you'll be able to do the comparison. And that is any service provider that is offering you that is the one that you will go with, not necessarily Vanguard. I hope that answers your question. Okay. You will see the recording will be available on YouTube. Olabi Moses. Yes, you can have two ISAs. You can have a lifetime ISA, and you can also have a stocks and shares ISA. But I believe that the two of them should not be more than your total allowance. So let's say you have £4,000 in your lifetime ISA, your stocks and shares ISA per year should not be more than 16,000. So that makes the total 20,000. That is what I believe. But you can check to verify. You can check to verify. You can have two ISAs, but your total allowance for the year must not exceed 20,000. I have put the YouTube channel there once again. So question is, if I have 3 kids, do I open 3 different accounts, or do I just, I think you'll open 3 different accounts. I believe some companies used to allow you to open 1 account and open those 3 accounts inside that 1 account. But over time, some of them have said you need to open 1 account individually. So you'll have to open 1 account individually for them. Can I change my VUSA to VUAG on Vanguard? You can, but the issue is that you may have to sell it. You may have to sell your VUSA and then buy VUAG. But I would say keep your VUSA and just start buying VUAG. You see, keep your VUSA as it is and just start buying VUAG. How to find ETF stash funds that you can be contributing on your own? That you can be contributing on your own, which will not be automated direct debit from Vanguard. I'm sorry, I don't understand that question. How to find ETF stash fund that you can be contributing on your own? You can be contributing on your own because they give you 2 options. The first option is for you to do direct debit. The second option is for you to buy it. So you can decide to buy it just one sale. And then whenever you have money, come and buy again. You can decide to do that, or you can decide to do direct debit. Where can one invest emergency fund that can be easily accessed whenever needed in the UK? This is a serious question. The question is that you want to keep it in cash as much as possible. Because the thing with shares is that shares carry risk. As you can see, there are sometimes shares goes down, there are sometimes shares goes up. So you don't want the cash that you need tomorrow to be invested. You want to keep that in cash as much as possible. You see what I mean? Donald Trump can get in January now, and the stock market just responds and shares goes down. Maybe that is when you need your cash. You cannot control how the market moves. So stock market is for people that want to be in there for more than, I would say, even 5 years. You see what I mean? It is somebody that wants to consistently invest for a long time. It's not the money that you need, let's say, in 2 months' time, and then you go and use it to buy Apple shares, and then Apple goes down. You say, my money is gone. Stock market is not for people like that. It's not for that kind of cash. It is for cash that wants to grow over a long time. Do you want to talk about the rate or charges by different operators? What do you what are your recommendations? I'll tell you to read it. I'll tell you to read it. There are quite a lot of them out there, but I am very, very comfortable with Vanguard because Vanguard's principle has always been very, very low fees. Very, very low fees. That's Vanguard's principle. So I'm comfortable with Vanguard, but you can always read up on them. You can compare them on Which. There's a website called Which. Just compare them. You can do that. But I've always been comfortable with Vanguard for a long time. You know, even like for adults trading 212, I think they don't charge any fees. I think they brought out some fees recently, and it's still very, very small compared to other providers. So I'm comfortable with companies that are reputable like that, and they have very, very low fees. Okay, please confirm the age limit for lifetime ISA is 40 years. Yes, the age limit for lifetime ISA is 40 years. How do I invest in ISA if you are in Ghana? You cannot invest in an ISA if you are in Ghana. What you can do is to open a portfolio account for yourself. I think Invest Bamboo is in Ghana, and I think Cheaper Cash is in Ghana as well. So you can buy the S&P 500 from Ghana, but it will not be in an ISA account because the ISA is only available to people that are in UK. And the ISA is a formulation of the UK government. Okay, so you can still open an investment account in Ghana, maybe through Cheaper Cash or Invest Bamboo, and still invest in the Vanguard S&P 500 as we said before, but it is not through an ISA, and you will still be able to monitor your return yourself. Okay, I think just if you put my name on YouTube, just put Toyib Adelodun on YouTube. Just put Toyib Adelodun, Toyyib. Just put my name on YouTube. You'll be able to see my YouTube channel. But I have also been, okay. Right. To everyone in the meeting, my apologies. Okay. I have just put my YouTube channel there to everyone so that you can see it. My apologies. On Trading 212, it is stocks and shares ISA. Trading 212 is a stocks and shares ISA. If you want to move money from a cash ISA to a stocks and shares ISA, that is easy. You just you can always do that. Just give them a ring, they'll be able to sort that for you. Just give them a ring, they'll be able to sort that for you. I cannot buy ISA from Norway. What do we use here? In Norway, what you just need to do is to open a brokerage account. You open a brokerage account, and then you'll be able to invest in the S&P 500 from there. Because I don't think Norway has ISAs. The ISA is a formulation of the UK government. How do I open Vanguard, please? I just did an illustration of how to open Vanguard. Just go to vanguardinvestor.co.uk and then sign up. If it is junior ISA, you can sign up to junior ISA. If it is ISA for adults like you can do that as well. And you'll be seeing the recording on YouTube as well when it comes up. Which is better between Vanguard managed account and self-trading? We do not trade. We are not traders. We are investors. Traders have a short-term mindset. Investors have a long-term mindset. We are very, very different. Trader wants a change in like $5 to make some money. An investor is investing regularly over a long time. It is different mindset. We are not trading. We are long-term investors. Okay, how can you differentiate between when opening lifetime ISA for retirement or for first-time property? Because yes, I think it is the same. It is the same. The only thing is that it is when you are withdrawing it that they will ask you what you are withdrawing it for. Because if you are withdrawing it for pension, you have to wait till your pension time anyways. But it is only when you want to buy property that you can withdraw it to contribute towards your property. I think that is how it works. Yes, the kids have to be resident in the UK, yes. Somebody that is above 45, I think if you are above 45, the best book that I'll tell you to read is How to Retire by Christine Benz. I think I have the book here. I'm not sure. Is that it? Oh, no, that's not the one. That's another one. This one is Milton Friedman. How to Retire by Christine Benz. That is the best book I'll tell you to read. The reason why I'm telling you to read How to Retire by Kristen Benz is that between 45 and the time you are going to retire is not a very long time. Let's say 20 years more, or let's say 25 years more. So we now have to work out a plan for you in terms of, say, where are you now financially? How much have you saved up until now? How much can you save? You know, do you have national insurance and all of that? So you really, really need to sit down and see a financial advisor in terms of drawing and mapping out a plan. Because for someone like you, when do you plan to retire is a very important question. So how much have you saved up already now? And this thing goes to a lot of us that have come abroad at a very older age. It is very important to know you are not qualified for state pension in the UK unless you are paid. You are not qualified for full state pension in the UK unless you have paid national insurance for 35 years. So you now want to think, okay, if I've not paid that amount of national insurance, what will be my pension plan when I grow older? So if you are 45, I'll tell you, please read How to Retire by Kristen Benz. Digest that book, okay? And then find time to sit with a proper financial advisor. It is worth every penny to sit down and draw a map onto how you are going to retire. Because your plan will be very, very different from that of a young person. I think Mary Adesanya is asking, how about Ireland? I am very, very sure there will be investment accounts that you can open in Ireland. I'm sure by the looks of it, I don't think Ireland has an ISA. So what you want to do is to open an investment account, let's say like an investment or a brokerage account, you know, and then you'll be able to invest in Vanguard from then on. You know, that is just how you are going to start. But I can do some research and do some follow-on sessions on this, and then you can still ask me questions on every of my timeline, and I'll be able to get back to you. I mean, I have quite a number of following on Twitter, Facebook, and people get to ask me questions, and I still get to answer. And in my morning sessions as well, I do answer a lot of questions. But I think with you, since there may be no ISA in Iceland, the best thing would be to open a brokerage account. There is one that I saw one time, they call it DiGiro. I'm not sure if that is in Ireland, but there will be some brokerage account in Ireland. Let me check. ISAs in Ireland, okay? Some people have already asked the questions. Okay, Ireland do not currently offer ISAs. Okay. Somebody is asking, can I open a Vanguard account in Ireland? So you can just say investing account in Ireland. So you can open an investment account in Ireland. Yeah, there are quite a number of brokers in Ireland that you can use to open, and then you'll be able to buy Vanguard, say brokerage account in Ireland. Okay, Hargreaves Lansdown is in Ireland. I think eToro is in Ireland. There are quite a couple of them that are in Ireland. You just need to check them out. Yeah, somebody even did some, yeah. I think Trading 212 is in Ireland by the looks of it. Try and check it out and see if you can download it. Yeah, if Trading 212 is in Ireland, then that is fine. I mean, I use them in the UK as well. I think Revolut is in Ireland as well, but there's a lot of issues about Revolut that I heard before. But Trading 212, I know them, and see if traditional banks offer them as well. Then you'll be able to use them. Okay. Is it 9K for total of all children? 9K max per child. 9K max per child. 9K max per child. No, for adults, Ms. Badmus, your question, for adults, yes, you can withdraw the money at any time. But for children, you will have to leave it there until they are 18. I believe. Just give me a second. When can you withdraw junior ISA? Yes, the child will withdraw it when they are 18. That is junior ISA. But for an adult, you can close shop, sell all your shares and withdraw your cash. No problem if you're an adult. Yes, please, I stopped paying my pension. Do you think it's advisable to invest myself? You can just invest it yourself. But it will be good to sit with an advisor and just work out a plan so that you know how much you want to be putting into your pension yourself. I'm not sure the host is answering any questions for us watching on TikTok. Oh, my apologies. I'm just trying to run through as many questions as possible. How can I get a good financial advisor here in the UK who understands where we are coming from? There are quite some ones. I think I can do some research and get back to you, because what you really want to see is somebody that is like a fiduciary. A fiduciary, they call them in the US, those people that they are really fighting for your interest, not just those people that just want to get commission. I can do some research and probably do like a podcast with some of them, and then that can understand where we are coming from. That is very key, because that journey is not easy. It is not easy at all. It will be good. I'll do some research and I'll put some information out there on very good advisors that can support people like us that know where we are coming from. Particularly, the way we are talking about people that are like 40 years and they moved here, they've expended a lot to get here. They now have to start building afresh. We need to do more to support each other, because that pension period is not very easy. Can one move his pension from Nigeria to the UK? You will have to do that yourself, I think, if you want to. You will have to do that yourself. There are a lot of exchange rate risks and all of that you will have to be doing that. Like, you cannot, it will be difficult to see a company like Vanguard helping you to do all of that work. You will have to do it yourself. Do you think it is important to pay pension? Just an advice. It is important to pay pension. It is even important to even have an extra pension plan for yourself, because you need a lot of money when you are growing old. For our own generation, we cannot say that we are going to leave all our living expenses and say our children to look after it. It is going to be very hard. So try and decide, how much do you think you will need in your old age? It's very important. How much do you think you need? £1 million, £2 million, £500,000? Where do you want to live? That's why that book, How to Retire by Kristen Benz, she interviewed a lot of people that are in their retirement age and was asking them questions. How do they plan for their retirement? Some of us don't even know where we want to live when we retire. You cannot live in London when you retire. It's not like, it's super expensive. So maybe you are living in a 2-bed house, you have to move to a 1-bed house. All of those things has to be planned. We cannot leave it to just happen just like that. So those are the kind of things we need to look at. To get that book, How to Retire by Kristen Benz, and then also let's start seeing how to speak to financial advisors on this kind of things. I think it depends. I mean, the issue with companies like Barclays, for that question, the issue with companies like Barclays is that a lot of them charge very high fees. A lot of them charge for bespoke services. They want you to have a particular amount of money before they are able to give you an investment advisor, that kind of thing. But you can always speak to them to find out. Does the return on investment comes from dividend and share price increase? Yes, that is what it comes from when you invest in companies like Vanguard S&P 500. There was another thing I wanted to show you, but I don't know if I should show you now because we are just rounding up. If you go on Google, for example, and just says the top investors in Facebook, in Meta, because Facebook is Meta. So if you go there, you will see that the top Meta investors, well, most of those companies in the world, when you see BlackRock, you see Vanguard. When you see BlackRock, you see Vanguard. When you see BlackRock, you see Vanguard. And BlackRock manages pension fund for a lot of companies. BlackRock manages about 10 trillion US dollars. Vanguard also manages hundreds of billions of dollars. So that money that you are paying to Vanguard, Vanguard is using it to buy all of those shares, and they are aggregating it. They are paying you a percentage based on how much you have contributed. Does it mean that we cannot access our NIN for those that came and started working in the UK at 49? You will access, but you will not be able to get the full amount. The full amount is around 200 and something pounds every month. But it is, well, how much is it? Let me see. Let me just check. How much is full state pension? Full state pension, UK. Yeah, full state pension is 221 pounds per week, but you have to have paid national insurance for 35 years for you to be able to get that full state pension. So if you started working at 49, you will not be able to get the full state pension. You will get something, but it wouldn't be much. So we just need to start planning ahead for things like that. Thank you so much, Ayodele. Thank you so much. I'm 26 from Ghana, have about a savings account, and I'm confused where to invest it to triple my money. This is the mentality of the triple my money. That is the problem. That is the problem. You don't want to approach investing like that. If you have the mind of say, I want to triple my money, it is not the right mindset. So I will urge you to read those books that I put there before. Read those books again and have a different outlook towards investing. What we want to do is consistently invest over time and let it grow. You know, that 11,000 that you say you have, even if it means for some of us, it may not be even to start investing. Some of us need to invest in ourselves to become high value and earn even bigger money. Because investing is gently over a while, you know. But if you take that money and invest in yourself, maybe you get a bigger qualification, or you get a more a qualification that makes you more valuable in the marketplace, then you can earn more money. And then when you earn more money, you'll be able to save and invest even more. Okay. I think we have covered. Is it possible to stop this when you move out of the country? Yes, you can move out of the country, you can stop it, but adults will be able to withdraw. Children will have to wait till they are 18. That is what the rules are for junior ISA. Okay, is Vanguard a third party? It depends on what you call third party. I am not sure what you mean by third party, but you are investing through Vanguard. So I'm not sure what you mean by third party there. Please, if you could explain it. I'm just trying to see if we have covered all the questions. Okay, Haruna is saying, I'm trying to open a junior ISA for my son, but upon registration, I don't seem to find the option of S&P 500. What you need to do is if you can hang on, Haruna, and see the YouTube video when the YouTube video comes out. You will have to fill some forms before you get to the investment part. You have to put your national insurance in and all of that before you get to the investment part. And I particularly showed the investment part where you pick the funds, you know, and then you'll be able to pick the investment. But when the YouTube video comes out, you can check it to be able to really figure it out. Just trying to check to see that I've covered all the questions, and I have left the YouTube channel there for you as well. You can always check it. There will be a lot of content there that are useful, personal development content, people that want to grow in your careers. There are so many beautiful things that we are putting on that YouTube channel. So please subscribe. It is for for the good of all of us. Can this £20,000 be invested each year? Yes, it's £20,000 every year. £20,000 every year. You are every April the 6th, you are able to open £20,000. April the 6th, you are able to open £20,000 again. Even for your child, every April the 6th, you are able to open £9,000 again. Okay. Just trying to make sure that I've covered all the questions. Yeah, 10%, that 10% is coming from increase in share price and dividend. That is it. Yes. Well, there might be other companies. Somebody is asking if Nigeria only has Trove Finance, Cheaper Cash, and Babu. There may be others that I may not know, but please do your research and do your due diligence on each of them. I know Bamboo. I know because I follow a lot of happenings in the tech community. So I know the founders. In fact, we've interacted a couple of times, but we've not just worked together, but we've interacted a couple of times. I know the investors on their platform. I know that they are doing very, very good work. You know, these kind of things are not available before. So it's good to check. You can even go and check with like Standard Chartered, go and check with all of those companies and see if they have those opportunities. Now that we have the information, the research is now on us. You know, at least we know it is working. It is not they, I hear them say, now we now need to go ahead and do those research. Yeah, money box for lifetime ISA, Miss Cynthia, money box for lifetime ISA is not bad. There is another one. I think it's more about rate. Money box is okay for lifetime ISA. I think it's okay. As long as they are not taking your money with fees, I think it's fine. People that don't have kids have said we can open one for ourselves. We can open stocks and shares ISA for ourselves. Can I do an ISA for a child of 12 years old and 10 years old? Yes, you can. Yes, just open one individually for them. So the one that is 12 years old has 6 years for him or her to be able to get their account. The one that is 10 has 8 years. So the more you can put the money in for them. You know, I was watching YouTube one time and I was seeing all these young children. They are like 25. They are like, some of them are like 22, 23. And they're saying, I've started buying property in Hull. I started buying property in Newcastle. You know, all these 50,000 pounds property. And I'm thinking, how were they able to raise money? And when I watch their podcast and I'm saying that, maybe their parents have been able to save money for them, and then that will be their first property. Some of them will just go into University of Newcastle, and then the house they are living will be the house that they bought themselves. And then you now wonder, so these people's parents have been able to do something for them. So this is how it works. So we can also set our own children up like that as well. Your children might want to be an investor, might want to be an entrepreneur. Maybe the money that they will use to start, maybe it will be from their junior ISA. We have to set them up. They don't need to start the way we start. Suffering is not the Olympics. That is what we need to, that is our own job to make sure that we are doing something ready for them. Minimum amount to start, as I said before, Mr. Olowora, my brother. Vanguard has 500 and £100 direct debit. You can do 500 at once or do £100 direct debit. But when you start with £100, after a few months, you can go into the settings and reduce it. That's what I know most people normally do. You just start with £100 and after a few months, you go and reduce it to maybe £50. Okay, I think we've actually run through all the questions and we haven't done too bad. We are just 10 minutes over time. You don't need to wait. You don't need to wait till the 6th. You don't need to wait till the 6th. You can actually start now. You see, if you start now, you still have that 9,000. You still have that 9,000 up until April the 6th. And then next April the 6th, you start again. Can we withdraw some money from VUAG in case of emergency? This is why we need to have an emergency fund before we start investing in VUAG. You see what I mean? Try and have an emergency fund of 3 to 6 months of your monthly expenses. You don't want to go and sell your VUAG because you have flat tire. That is not how it works. It is better to have an emergency fund and then you start investing. Can you open joint account with your partner? I think the two of you can open individual ISAs. I don't think you can open joint account. There was actually a couple, you know, this lifetime ISA, they just bought their property a few months ago. The two of them max out the lifetime ISA. You know, the lifetime ISA, you can put 4,000 and get 1,000. The two of them did it. 4,000, 1,000, 4,000, 1,000. So they had 5,000 and they joined it together to get 10,000, and then they added more money towards their property. So you can open individual ones. Yes. VUAG is better. As I said before, VUAG reinvests the dividend on your behalf. VUSA will pay you the dividend, but you don't need the dividend because it's just a small amount of money. You want it to be able to be reinvested. That is why VUAG is better. VUAG will reinvest the dividend automatically. VUSA will pay the dividend into your account, and then you will now be the one to pick it up. You don't want that lag, you know, because you may not know when the dividend is being paid unless you target it and you are sure of it. But with VUAG, it just reinvests the dividend automatically. Yes, that is what I said. If you have VUSA already, there is no need to sell the VUSA. Just start buying VUAG from now henceforth. That is fine. Vanguard does not have an app. It is a website. It is a website. Yes. Moneybox is okay, but just check to see their fees. Fees, I am much more important about fees. I think for Moneybox, for Vanguard, your money is protected by FCA. You can check that out as well, because the FCA protects your funds, I think, up until probably £80,000. You are protected by the FCA, so you'll always get your money back, whatever happens to the company. But what you want to make sure is that the fees, they are not tampering with the fees. And Vanguard is huge. You see, Vanguard, billions of dollars in investment. Vanguard is managing. So you can be rest assured with Vanguard. What fees? Interest or monthly fees? So if you check Moneybox now, let me see. These are the reasons why it is good to check. Moneybox LISA fees. I'm just checking that for you now. Okay. Moneybox LISA, it says we do not, instead, we retain the difference between any interest received by underlying third-party bank. Yes, what are the fees? I think that's the thing that I'm very, very particular about. Because some of them, they hide it within the small print. They won't talk about it. Yeah. I couldn't see it here, but I can do some research, because if you go on Google and you say compare LISA accounts. So if you see money saving expert, all of those here, okay, lifetime ISA accounts, okay. Essential only. You see where it will compare each and every one of them, talk about their fees, and then you'll be able to see, okay, Moneybox rate is 4.8%. Does he have any fees? He didn't talk about the fees here, and some of them is 4.7%. Yeah, it's just about really checking them and reading the fine print. I didn't see anything there that indicate fees. But if you are investing, some of them will charge you fees. Some of them will say £1 a month. It is all those fees that accumulates and piles up. Yes, £1 monthly. You see what I'm saying? I mean, it's not a lot, but that's £12 that you are paying them. And some people might be doing it for you free. So that's just £10 £12 that you are paying, you are giving to them free of charge. Okay, let me see if some questions came in. Are you only live on TikTok? Yes, tonight I was only live on TikTok because we are actually doing the program on Zoom, and I've already put the information out for people to join in on Zoom. So I just put the phone. There's nowhere else to put the phone, to be fair. So I just put this extra phone now to do a live on TikTok. Okay. The recording will be available for those that have just joined. Is it advisable to do ISA with our UK banks? A lot of UK banks don't offer flexibility. They do have cash ISAs, but they don't have flexibility for, let's say, stocks and shares ISA. Some of them do not have. That's why I just go to Vanguard straight away, or go to every other one that has stock and shares provisions. Okay, I think we have covered as much as possible. I hope you have found it insightful. I am live on most platforms, sharing content regularly: Instagram, Facebook, TikTok, YouTube now. Follow my handles. Any information I see that I know is beneficial, I will always share. Everything I have researched on my journey, I will always share. I always say I have exceeded my expectation in terms of where I came from, where I was born, and where the kind of life I am living now. And I think I can really, really contribute and share as much information as possible so that we can all grow, so that we can all excel, so that we can all succeed. This thing is a positive sum game. All of us can make money. All of us can do well. If you look at the property ladder, if you look at the race of people that own property, their background, you see that we are lagging behind. If you see that people that own stocks, people that own assets, we are lagging behind as well. We don't want to be consumers. We also want to be investors. And these are the things that can get us there. So I'll release the video on YouTube. I want you to catch up with it and also watch it, record it, watch it again. Whenever you feel you need more information, I am live every morning, 5:30 UK time, 6:30 Nigerian time, Instagram, TikTok, and Facebook. And I'll take as many questions as I possibly can. Thank you so much for joining. I hope it is worth your time. Have a wonderful evening. Your brother and friend, Toyi Badelono. I will always be here sharing everything I learn along the way. For those that are looking for scholarships, there are still scholarships globally. In January, Romania government scholarship will be available, and the Turkish government scholarship will be available for those that are looking for scholarship. The UK government is still giving people £25,000 to come and train to teach physics and languages in the UK. All these opportunities are there. As soon as I come across them, I'll be releasing it as much as possible. Thank you, thank you, thank you so much, everybody. Let's have a wonderful evening. Bye for now.